All right, let's look at GBPUSD, EURUSD, Gold, AUDUSD. Let's see what we can get from the markets when the market open in the next few hours. That is Monday, the 29th of June, 2026. Now, we have done our weekly outlook for all this pair. You can see the video on the channel. They are all there. Just look at it so that you can know your weekly bias. It's very, very uh, important that you have your weekly bias so that when you are trading, you trade in line with the bigger move of the market. Okay, because once you leave your weekly time frame now, you may not be able to see this bigger move, and you may just be working with a smaller time frame that goes with a lot of noise. So you might get distracted and miss the bigger picture. That is why at the end of the week, I do analysis on what this week, what the next week will actually look like, looking at the current chart and the current weeks and the previous weeks that have passed. Okay, so now you can go and check those videos for um, those analysis. But for GBP according to our analysis, we find out that the market has been trapped in this area for quite a while. This is some months ago that has been trapped, and the market is an uptrend, as you can see, is an uptrend that have the possibility of also reversing. So but what do we do now? Now, according to our weekly outlook, like when the market, if the market come below this level, we should be looking for buying opportunity around this level. Then if the market come around this level, if it break and retest this level, we should be looking for selling opportunity. But what can we do uh, with the price? Looking at the price, because the market have not broken out of these zones. But if it break out of these zones, retest these zones, you will have better trades trading to the downside if the market gives us a bearish momentum. And same with the upside if it gives us a bullish momentum. But for those of us who want to trade in between, let's see what we can actually get from this pair when the market open in the next few hours. That's the 29th day of June 2026. So what can we do? What can we do? Now the market is close to a very strong zone. I told us earlier that I only trade pair that the price is close to my major zone. So this pair, the price is close to my major zone. So what can we do? Now the first thing I will always recommend is for you to trap the price between support and resistance. Trap the price between support and resistance. So let's do that. Let's trap this price and see what we can get from it. Okay. Now, this price have been trapped between support and resistance, and I think I can still trap it vertically. Yeah, it may not be that accurate, but yes, let's leave it that way. It makes the price action to be smaller. When you trap the price between support and resistance, it makes the whole price action smaller and clearer. So that's the first thing you should do. Trap the price between support and resistance and wait for the market to break from that support or from the resistance and wait for a full price action retracement. Then you can wait for an engulfing candle for confirmation, or you wait for a weak rejection candle for confirmation before you enter a trade. Now, what should you be expecting from GBP when the market open? Now, these are the possibility that can play out in this market when the market open. First possibility, the market can break out from this structure, retest this structure, and move to the upside. Okay, that's a possibility, a very It's very, very possible for the market to do that. But is that the only thing that can happen? No. The market can also break to the downside. Now, if the market break this level retest, I will not advise you to trade it because you will not have good risk reward. So, but if the market break this down, the support, retest it, then you can have good risk to reward. Now, one of the reasons why I don't like trading in between a very tight zone, if I trap a price between support and resistance and it's very tight, most of the times you don't get good risk to reward trades. So that is why I always want the price to break from that structure, then I can look for a good risk reward trade. So these are the two possibilities that can play out tomorrow. The market break out from the resistance, retest it. Remember, a full price action retracement, not one candlestick retracement. Once the market retrace and you see a bullish engulfing candle or a weak rejection candle, then it's a good, you can take a buy, but make sure that you're trading small. Now, the market can also do a deeper retracement down to this level. And if you do a deeper retracement, just be watching out for higher low, watching out for the formation of higher low, and watching out for a bullish engulfing candle. Even inside this level, you can still take a trade if you see those two things play out, the higher low and the bullish engulfing candle. Yes, the market can do a deeper retracement. Now, that is for the bullish aspect. Now, for the bearish aspect, the market can break, retest this level. Please, I won't advise you to trade unless you're a scalper, okay, because you will not get good risk to reward trade. So allow the market to break this zone, also retest this zone, then you can enter a trade to the downside. Now, let me just show you the best possible place for your stop if the market happen to break through. Now, if you are entering the market from this level, please, your stop should be around this level. Your stop should be around this level. If you want a wider stop, if you want to put your stop around this level, which I will not recommend, you can, but make sure that you use a small lot size. For instance, if you want to put your stop at this level and you want to use 0.6, then if you move your stop to this level, please divide that lot size by 2. Use 0.3 so that you can still risk the same amount of you can have the same risk. Okay, you risk the same amount of money if you're having a wider stop. But this is the best place you can actually put your stop so that you can have good risk reward ratio. Now, if you are taking the trade and you're targeting this zone, that would be a very good, that is 1:7, 1:7 if you are actually taking the trade. Of course, when you see a trade 1:7, as the market move, you can enter more position. I have a video on that also, how to utilize the move. Okay, many a times you see trader waiting for an opportunity and the opportunity will play out. The market is giving you the move. You just enter one position and that is all. You cannot actually make good use of that move. So I have a video on that so that you know how to enter. Now, what some traders normally do, once maybe they are trading 0.5 and the market moves to their favor, they will enter 0.6 or 0.7 or 0.8. They'll keep on increasing it. That is not actually the best. What I recommend, if you enter 0.5 and the market move, break a structure, retreat, enter half of that position. You can enter 0.2 or 0.3. If the market move again, break through that structure, another structure, retrace, you can enter another 0.2. Don't increase your lot because you may end up losing all the money you have made. So if you enter half of the position you entered previously, even if you lose the trade, you will still have some profit left. If the trade retrace back and stop you at, of course you break even. So if you have broken even or you have booked some profit to yourself and the market reversed against you, at least you will not lose all your capital. But what some trader does, once the market break, retest, and they're already in profit and they're using maybe 0.2, they will now some will even use 0.9. They will triple down and add more trade, and the market might reverse against them, and you end up losing. Of course, I know if it goes to your favor, you make more money, but most of the times it will always reverse. Okay, and now once it's reversed and you because you are trading too much, you be careful of your stop. Sometimes you may end up, if your psychology gets messed up, you end up widening your stop, so that you'll be hoping that the market will reverse. Please don't put yourself in that position. Don't do that. That's why I recommend, if you enter 0.5 for instance, and the market goes to your favor and you want to add more position, at least you can enter 0.2. Like if this market is to move between this place, between this point and this point, you will have close to 4 to 5 opportunities to enter into the trade again. So that is where trade management comes into play. But that's not what we are doing now. Okay, that's not what we are doing. But I'm just giving an instance how we can actually utilize trade movement. Okay, so that is one possibility. Now, if the market breaks to the downside, what should you do? The same thing. You look for the best logical place for you to actually uh, put your stop. So somewhere around the middle, yeah, if you see some level of price action, like I said, if you want to use 0.6 at this level and you want to use this level, please divide your lot size into two so that you will not risk too much. Okay, so you can put your stop at this level and you target the next zone. So this can also give you that same 1:4, 1:5, 1:6. So this is actually a good trade. But remember, as you are trading, have the bigger time frame move in your head, where you know what the bigger time frame is saying. Okay, that if you break from this level, retest this level, you have the tendency of getting more move than once it breaks. So once it's still at the middle. Now there's something the market can do, though this is a little bit advanced. The market can break into this level and do as if you want to go to the downside, cause liquidity, and move to the upside. The market does that a lot. So watch out for it. Now, how will you know if the market just break down to cause liquidity? How will you know? Because most trader, once this happen, they will still be selling while the market will be stopping them at. They will enter the market, will stop them at. They will enter it to stop them at until the market will just go. But if you can train your eyes to see this move early, these are the best points to enter into the market. So once the market break in, look for higher low. Look for higher low. Most of the times, if the market does this, you will see something like an higher low around this level. Okay, let me just share this. Like an higher low around this level. Most of the time when the market does it. Now, if you connect your trend line and you see that yes, the market is respecting this higher low, please be careful with your set trade. Okay, most of the time when the market want to do that movement, check, you will see some level of higher low that has happened before, so you cannot take that move to the upside. But like I said, that is not what we are expecting, but it happens a lot in the market. So, but just have it in mind. The same thing happened even to the upside. So let's go back to what we are doing. And this is our trading setup for 29th of June 2026, being Monday. As the market open, we wait for the market to actually play at any of these, break from this structure, retest to the upside, break from this structure, break, then retest. Then we'll look for bearish candlestick for confirmation. Remember, I said full price action retracement, not a one candlestick retracement. Now, the market can decide to just remain in this level, let him remain until the market break out. Please just stay away from the market. That is my recommendation. Okay. Now, before we move to Euro USD, please, you can do well to subscribe to this channel so that you can get daily analysis before the market open, and also our weekly outlook every weekend for all the pair before the market open for the week. So all the weekly analysis for all this pair have already been on this channel since yesterday. So you can actually do one or two things with them. You can add them to your own analysis. Remember, this video is for educational purpose. So do your own analysis and pick one or two. You can learn from my own analysis, and I believe together we'll become a better trader. If you have any comment, you can drop it on the comment section. I'll respond. And also, if there's any pair you want us to actually analyze, please you can also drop it on the comment section. All right. So see you in the next pair. Let's move to Euro USD. Now let's go to our weekly outlook so that we can recall what now if you look at your Euro USD, it's already giving you a sell move from the previous week. The market broke out from the structure, retest the structure, and this is clearly a sell week. But like I said, that is not the reason why you should not watch out for a buy opportunity. Okay. Now, what was our weekly outlook? Now, the reason why we get our weekly outlook, it guides us in our daily analysis. Okay. Now, see this market. If this market now, this is our weekly outlook. If the price remain in this level, we only look for selling opportunity. If the market break to this upside, we only look for buying opportunity. Now, does it mean that because the price is at this level, we are not going to look for buying opportunity? Of course, we can. I told us about the market forming higher low. Now, let me give you an instance here. For instance, this could be an higher low. This could be higher low. This is low, higher low. It's possible. So if you see the market forming another higher low, let's assume the market move this way, form another higher low, and give us a bullish move. Of course, be careful with your buying market, with your sell market, if the market starts forming this. Okay. So, but that is by the way. So I'm just trying to tell you that the fact that this is a bearish sign, bearish setup, does not mean that the market cannot reverse. Okay, so it can, but let's stick to what we are saying on the chart. So what can we do to this pair in our daily analysis? Now, remember the rules, very simple. Trap the price between support and resistance and wait for the market to break. And when it break, wait for retracement. Then you can take the trade if you see confirmation from a bullish engulfing or a bearish engulfing candlestick, as the case may be. Okay, now I think I can trap this. Now, as you can see, the market broke out from this structure, gave us a level of retracement. Now, this is a sign that yes, you can buy this market. But do you know why I will not buy this pair? Because of our weekly outlook that is giving us a sell move. That is one advantage of the weekly outlook. Now, this pair is a good, like I can see some level of higher low. I can draw this. I can draw this. Yes, the market can decide to come to this level, bounce back from this level is a possibility. Can decide to come to this level, form another higher low, move, form another higher low, then move to the upside. It's very, very possible. But because of my weekly outlook telling me that this is a is a bearish market, I will not be consuming this now. Why? I will see this, I'm seeing this as a fake out. And this is just to unstop. And this is just to unstop. Because I believe so many traders have already started buying here. Imagine you remember what I told you, that always wait for a full price action retracement, not a one candlestick retracement. Some traders have already bought here and the market have stopped them out. Or maybe this is where their stop is. The market is coming to on their stop. So our selling, our weekly bias is talking about is telling us that this is a sell uh, week. So I should be waiting for the market to break from this structure, retest this structure, so I can take a safer trade to the downside. Of course, is it wrong to trade from this angle? No. But I trade following my weekly outlook. If the market decide to go up from this level, fine. I have nothing to lose. I'm not I'm not on the trade, so the market can go. But I like trading following the weekly outlook. If you trade that way, it makes your losses to be small, and it reduces the numbers of trades you enter. It reduces the numbers of trades you enter. And once the numbers of trade you enter reduce, definitely the numbers of wrong trade also reduce, and your profit will also increase. Because what brings losses is the wrong trades. Most of the losses that we have, sometimes you now say, "Oh, I saw this, why did I even enter? Yes, I think I saw this, why did I enter?" Why? Because we enter too many trades. So please make your plans, stick to your plans, and you will see your trade improving. Now let's go to gold. Let's go to gold. Now, what should we be expecting? Let's go to the weekly. Let's go to the weekly outlook and see what gold is doing. Now, uh, gold is a very this is a wonderful pair. Like, it can give you fast money and also take your money so fast also. So be careful when you trade gold. Be careful, be careful. Always use a smaller lot to trade gold. Now, gold is giving us some level of retracement. Okay, some level of retracement. And for now, like our weekly bias told us, that anything below this level, we can start looking for selling opportunity. But as long as the price is at this level, we should be looking for buying opportunity. Why? Because of this is the uh, price where the market gave us this move. So there's every tendency that from this level, the market can give us another impulse move. After every retracement, we expect an impulse move. Okay, so the market retraced from this level, and we are expecting that the market can give us another impulse move, even breaking through this level. It's possible. But as long as the market is above this level, we can look for a, a buying opportunity. Once it breaks this level and retest this level, we can look for a selling opportunity. Remember, when I say retracement, I mean a full price action retracement. No, gold have a way of giving you a one week rejection retracement. Please be careful so that you don't get stopped at. Wait for a full price action retracement before you enter into the trade. So now, what can we do with this pair in our daily analysis for this day, Monday 29th? What can we do? What can we do? Now, you can see this is a good price action playing out here. Now, remember the first rule: trap the price between support and resistance. Trap the price between support and resistance. So let's trap this price. Okay. Uh let's As you can see, the market has actually broken out from this structure, and okay, the market has broken out from this structure. So this is already a good trade playing out. Remember, is in line with our weekly outlook, which is, as long as the price is above this level, above this zone, we are looking for buying opportunity. So now, if you check the pair, what is going on here, you find out that this is the market giving us some level of buying move, and is in line with our weekly outlook because it's above this level. So what can we do? Yes, we can take a trade. When the market open, you can take a trade. You can. These are the kind of trade I can take, even though it's a little bit far from my structure, but is in line with my weekly outlook. So you can put your stop loss around this level. Remember, it's good. So don't trade it with the eyes of, maybe you are trading GBPUSD. So make sure you use a small lot size that risks what that you can let go of. Okay, so this is a good setup playing up. Now the market can decide to do a deeper retracement. The market can decide to do a deeper retracement this level to this level, or even to this level. Remember, as long as the price is still above this level, we have no business with selling. Okay, even if you're a scalper, scalp with the trend, scalp with the structure, scalp with the bigger time frame. If the bigger time frame is going up, patiently wait for scalping opportunity to the upside. it will reduce your your losses. Okay, I know when your losses reduce, of course your profit will increase. So this is what we can do with gold. So this is a good trade. Don't forget our weekly bias, our weekly outlook. Anything above this level, buying trade. Anything below this level, selling. So for now, we have no business with anything sell at this level. Okay, so that is good. Let's watch how the market play out. Okay, if the market break down to this level, they will look for a selling opportunity. All right, so let's go to AUD USD and see what we can do with the market. Let's go to the weekly time frame to see our weekly outlook. Now, the markets, okay, this is what we did. Uh, this is the structure. Now the market is giving us some level of uh, reversal sign. Okay, the market broke from this structure and retest the structure, and you can see this is what is holding the market now, this structure, and there's every tendency that the market can decide to move from this level. So what do we do now? What do we do? Remember, okay, let me go to daily time frame. Maybe you see it's better now. As long as the price is above this level, please only look for buying opportunity, because that is the trend. This is the trend, uptrend. So if the price is hanging around this level, only look for buying opportunity. Unless the market break, give you a good level of retracement before you can look for a selling opportunity. Of course, there is a trend line here, even though not too accurate, but this can also give you a guide. So make sure that the trend line is broken and the price retrace it, and then you can look for buying opportunity. So for Monday 29th, what can we do? What can we do? What can we do? What can we do? Let's see what we can do. Very easy. Remember what I told us, always trap the price between support and resistance. Then wait for the break of structure. Now we have trapped this price. Now let's now wait for the break of structure, and so that we can take the trade. Okay, remember, the best place to sell is at this level. That is what our weekly outlook told us, at this level. So our first expectation is that the market will break to this downside, then but another expectation could be the market will break to the upside, retest, they will target this level. Now, either way, the market must do one of this. The other thing the market can do again, which will not actually concern us, is if the market just keep moving in this angle. Just leave the market to keep moving until the market break out from this level and retest the level. Please stay out of the market. Okay, stay out of the market. So that is our that is what we can do for AUD USD. Okay, that's what we can do. So if the market is below this level, we look for selling opportunity. Above this level, if this trend line is taken out, we look for buying opportunity. But if you want to, if you are an intraday trader or a scalper, yes, you can actually trade this. This is also a good trade. The market break out to the upside, you can actually target this zone. That will give you almost 1:3 risk reward. If you target this zone, let's assume you enter the trade at this level, put your stop loss around the middle. This is 1 is to almost 1:4, almost 1:4. So if you actually trade this, if the market break out, give you some good level of retracement, you can target this trend line, or you can target this next trend line or the next zone. But this should be your first target. Okay, so that is what we should be expecting. If the market break to the upside, we target this trend line. If you break to the downside, we target the next zone. But mind you, make sure that you wait for a full candlestick retracement. You can look for the retracement in a smaller time frame, but just make sure that it's a full price action retracement, and also make sure that there's a confirmation from an engulfing candle, be it bullish or bearish, depending on where you want the market to break to, or a weak rejection candle. Okay, so that is that for this analysis. Please do well to subscribe to this channel so that you don't miss out on any of the analysis before the market open for the day. Every blessed day, I post analysis before the market open. So please do well to subscribe, click the notification bell, and like and share this video so that YouTube can make it visible for more traders. Okay, so take care of yourself. See you in the next pair. Remember, this video is made for educational purpose only. So always do your own analysis and get your own confirmation. All right, see you in the next pair. Bye.